lot for having us. It's a pleasure to speak to you again. And we believe that automation is basically one of the major anchor of digital transformation initiatives. We are seeing with a lot of our customers that the momentum is now. They are making long-term decisions now. And that kind of help us as being in a pole position in this very burgeoning space. Our TAM is more than like $60 billion. So from our perspective, our long-term vision is to allow our customers to be fully automated. We call it fully automated enterprise. That means no manual workloads left behind. Today, our customers go after their existing manual repetitive processes. But we are evolving our platform that in the future, they will be able to design it in an automated fashion. This is the reality today. Business users are building new processes because companies always evolve. They are building the new processes for manual consumption. But we believe we can evolve our platform so they would build the new processes. They would basically imagine they would draw them on a canvas, and they would be almost fully automated.
That's really helpful. And maybe just because I want to hit on the quarter because you actually put up really nice results last night. So before we jump into a little bit more discussion around the technology platform, I was wondering if you and Ashim could just give us some thoughts on the quarter last night. Obviously, really strong ARR growth, nice customer additions in terms of the net new customers. Maybe just some higher level thoughts on the quarter. And then Ashim, I might have a couple sort of more specific questions for you just so we can kind of knock that part of the conversation out.
Daniel, I think maybe starting with just your high level thoughts on the quarter, and then I can add some commentary on the numbers, Daniel.
Yeah, sure. Thanks. We had our best quarter in our history, and especially being quarter one and being the best ever, it's something amazing for us. It shows the tailwinds of almost starting a post-COVID era. It shows the tailwinds of our IPO. So I cannot be happier about this quarter results.
Great. Ashim, anything you would add on that front?
Yeah, I mean, Kirk, look, I would say we're building a generational company, and it shows in the quarter-to-quarter progression that we have. The pipeline, our demand for automation has never been stronger. I think you look at the analyst coverage, whether it's Gartner or Forrester, our clear leadership position is really what's translating to 64% growth in our annualized renewal run rate. You look at our net dollar retention rate. While we will disclose that periodically, you can see it. You can just see the strength of it by the number of customers that are scaling. 1,105 customers that have crossed 100,000 of ARR, and 105 customers greater than $1 million, which is up 126% year over year. Yep. That coupled with our continued investment in go-to-market and R&D, we feel really positive, not just about our execution in the quarter, but also of the opportunity that stands in front of us and the durable growth that we really see for our taking to be able to execute.
Yeah, that's really helpful. And maybe, I don't want you to go into too much of the weeds on this, but can you just talk really high level, just so investors that maybe aren't as new, or they're new to the UiPath story, can understand why ARR is probably the better metric to measure business momentum for you all versus, say, your revenue guidance, because you all are a bit of a unique sort of business model relative to some of the more traditional, say, SaaS application firms.
Yeah, so our business model, just maybe I start there very quickly, and I'll run through to answer, is we are a subscription-based company, primarily dealing with annual contracts with a very high stickiness factor. Our gross retention rate is 97%, and that really speaks to is bolstered by a strong land and expand model, which is seen by just the world-class net dollar retention rates that we disclosed in our S1 at the time of IPO of 145% at that time. So when you look at ARR, it takes the noise out of deployment methodologies as well as contract duration. But one of the values that we espouse is we want customers to be first, their choices to be first. So the complexities of 606 accounting means that if the length of a contract, whether they deploy on-prem versus cloud, all impacts revenue. None of that noise is factored into the ARR calculation. So it really is a great equalizer, which allows people to truly see what the company is delivering, what is, given our stickiness, how do we think about the run rate? And that also operationally means that we can be better stewards for our investors, because we can not take finance to say, customer, we need a 3-year contract. The customer can say, here is what works best for my program and for me to achieve our ROIs. And that really aligns well to our values.
That's super. That's really helpful. Two just sort of nuanced questions for you, or just sort of specific questions that have come up a couple times with investors this morning. Can you just talk about the Cloud Elements acquisition? Did that have any influence on sort of the ARR guidance in any way? And then the second one is, you do have an unlock coming up, and can you just try to dimensionalize that for folks just so they're aware of how that works in terms of more stock becoming freely floatable?
Yeah, sure. Just on Cloud Elements, listen, I'll give my color commentary. Incredible acquisition for us. It gives us capabilities that Daniel will talk about. Me as a former customer, loves it, and as former customer success thinks it unlocks a lot of use cases. Financial impact is pretty negligible at the top line, less than a couple $1 million of impact to either revenue and ARR. Actually, less than $1 million for ARR and less than a couple $1 million of revenue of impact on the revenue line. We acquired it midstream, and they really didn't come with a lot of revenue. Our basis was the technology and the capabilities that incredible team brought to our portfolio and the synergies we look at to achieve a fully automated enterprise. In terms of where you see the unlock is, I remember listening to the message to Daniel right after the IPO, freedom and joy. We want people to be able to have liquidity. So as we were designing our IPO, we went through a modified lockup. 30% of the available shares become unlocked as of coming due out tomorrow, and the rest of it will be unlocked after our September earnings, which gets us to a fully distributed enterprise value relatively quicker. What I would say is that 30% means close to 100 million shares. I just give that an approximate becomes outstanding. I would say the demand for our stock, talking to the buy side, talking to analysts like yourself, Kirk, we feel really positive about the momentum. And so I think we have nothing to fear in our minds. Like, we look at this as positive. And frankly, it was our original plan that we disclosed in the S1 that we're sticking true to.
That's super. I just want to make sure people are aware of kind of how that works mechanically. So thanks for entertaining those questions on the quarter. Now, Daniel, let's get back to the long-term opportunity for UiPath, because you're on the very early innings of a long and probably pretty big journey. One of the questions that comes up a lot is, sort of the technology moats, that you all have built. And I remember the first time I met you, maybe this was 5 years ago, talking about the vision technology that you had built into into the stack and thinking about how that unlocks so many sort of use cases that you couldn't do through sort of normal EAI technologies, and the ability to sort of mimic human behavior. That to me just by itself was an interesting moat. And then when you add on the thousands of, frankly, integrations and we have with other applications, because, the fields in one app aren't going to look like the fields in another app. So can you just talk about just maybe the moat just solely on sort of starting at that point, and then maybe, thinking about the things you've expanded even on top of that, because I realized that was kind of probably version 1.0, to a starting point.
Yes, and I can tell you that this is one of the most asked questions by investors, by analysts, about competition, and particularly about Microsoft. So I'm really happy to address it. First of all, as you mentioned, there is a philosophical different approach in how we automate processes versus more of a traditional approach, like enterprise integration type of techniques. And our approach is about emulating human users. So literally, we take an existing workflow, a manual workflow, and we translate it into a software workflow. But it's a simpler translation. It's almost a one-to-one, one manual step, like typing something into a field that will translate into typing into our digital workflow. So that has a tremendous advantage because you reuse the workflows. I think that was the biggest realization for me in the reason why we were so successful, because it's so powerful to reuse existing manual workflow. There is a tremendous investment in these workflows, and a competing technology will have to change the workflows, and that requires project managers, that requires developers, that requires much higher initial investments. In our case, you make a simpler business case rather than an investment case. So this is why we are able to address the long tail of automation opportunities. Now, going more in technically speaking about our competitive mode, I would say emulation of human users, it's very difficult. And this is proven actually if you look at self-driving cars, how difficult it is to build self-driving cars technology. And at the core of our technology, there are different type of software approaches that we have to very smoothly combine. We use user interface, we use API, and we use AI. And there is the secret sauce is the combination of these factors. It's again, if I may, in a self-driving cars, you need to use camera, you need to use LiDAR, you need to use many things to make it working really well. So it's really difficult, and it requires an experience curve in order to get it right. It's not enough to get it right, on SAP. It's not going to work on Oracle Fusion, not at all. So our engineers, even today, we have a huge team that deals only with this aspect of making our technology more reliable, and they fix hundreds of bugs year over year. They address new situations. You need to get to the car. You need to have customers. First of all, you need to have customers that want to scale, and then you need to fix the issues, and this is, self-repeating. So we have one of the biggest competitive modes out there. Another aspect you need to think about is this technology generates huge return on investment. It's not a personal productivity space. We are in a situation where we can prove the return on investment. We have value engineering teams. We have lots of POCs and pilots under the belt when we compare us against different technologies. And we proved consistently we are able to implement automations in half time any other competitor. That translates into huge return on investment and much faster time time to value. But in a nutshell, I would say that it's not only technology. Of course, we have an end-to-end platform that addresses most of the use cases in a much faster time, but we have also very flexible deployments. We don't lock our customers with a particular cloud, with the particular business applications. We adapt to their existing investments. And we have our ecosystem, which is a very difficult thing to build. For a rather young company, we have built an enormous ecosystem. We have more than 1.5 million developers. We have more than 3,500 partners, business partners, technology partners. We work with the big GSIs. They are building practices around our technology. And this is also a point that I want to stress. You need partners. This is a technology that requires implementation over implementation. So all of these factors constitute a big competitive mode.
That's super helpful. And you touch upon a couple things I want to dig into a little bit. When I think about your platform, one of the things that what's really interesting is when we talk to your customers, once they get a taste of your technology, they want more of it, which I think is supportive of your sort of strong NRR ratios. How long does it take to get to the C-suite thinking about automation as part of digital transformation? It feels like a lot of your customers are still in the first innings of this journey. They might be finding a task that it makes a ton of sense to implement you all. But how fast are you moving up the C-suite, or from a calling perspective, over the last 12 months? Just because it seems like we had a macro conference today, and shortage of labor is something that is a lot of companies are having to deal with. And I'd imagine bots and enterprise automation is going to be something that they need help. So I'm just kind of curious, how fast is this moving up the chain in terms of becoming not only a IT priority but a C-suite priority?
Well, I start to give you a sense of my perspective, but Ashim has a much richer one, being a customer and then leading our customer success and being the CFO. And a lot of time we initiate our land into the finance team, into a company. But we are seeing really an acceleration of C-level suite discussions. I think they are essential into really putting into motion a wide-scale adoption of automations. The first one that we had, I remember 4 years ago, was with SMBC Bank. This is where I've seen the first time the power of having a C-suite sponsor that is dedicated to automation, and they put big budget, big effort into automation. And SMBC is in a way our poster child. They basically publicly acknowledge return on investments in excess of $500 million in just 4 years of adopting automation. And throughout the years, we are seeing an increase of this type of conversations. The IPO tailwinds are here. Even only in the last couple of weeks, we had a few conversations with one of the biggest, sports goods company, one of the biggest finance company where we were not present.
And I think, Kirk, I think we're in the early innings in terms of the penetration within our customers, but we are really hitting our stride in terms of the elevation and the importance of automation. So if you think what's on the minds of every CIO, COO, and CFO, digital transformation has been something that's been talked about for a while. The tangible ROI and the fast time to value, more C-levels are now seeing that UiPath's platform is the accelerant that they've been looking for. And a lot of the proof of concepts at the grassroots level, a lot of the 100+ customers that are $1 million+ from us and our 1,000+ customers that are $100,000+, they are all out there talking about the benefits of what UiPath's platform has. And so it's actually elevated that conversation even faster. And we spend a lot of time now in our day between Daniel, myself, the leadership team, talking to C-level executives, and it's a pull. It's not us pushing them. There's more of a pull saying, hey, we heard this, tell us more. And I think that is really encouraging when you look at the positioning of UiPath, both short-term and for the long-term.
And are the ecosystem partners now at a point where they can help you push that message effectively from an enterprise perspective? Meaning, are your GSI partners now have enough people trained up so they can kind of amplify your message for you? Because to Daniel's point, you do need to implement some of these technologies. So having them equipped to do that and equipped to talk to the C-level only makes your message that much more powerful, frankly. It's a multiplier effect.
Definitely. I mean, listen, our partner ecosystem has increased just in the last quarter from 3,700 partners to over 4,000. Signing the Ingram Micro distributor that we took a relationship that we put out there. What I would say is on the GSI front, we are the preferred vendor because when you look at just technology leadership, our customer success, our partner success, and the way that we're supporting them, we are both investing in each other. And I would say if the question is it enough? It's never enough given the demand is so high for the platform. But right now, I would say yes, we see a lot of momentum. Our partner influence deals are the way that we're bringing work and collaborating with scaling our customers. It's actually been the best that I've seen since I've joined UiPath. And when I was a customer, I would say that was probably one of the question marks. And I think that question has been answered. Not only do they have the capabilities, but they also have a lot of appetite to continue to invest in a really hot space.
Yep. Daniel, you're obviously a technologist at heart, so I know you just had your most recent release come out. So I was wondering, what excites you about what you've just released out to customers? You have a very rich platform at this point. So I'm sure there's a lot of things that excite you. But when you think about the new value that you can bring to customers, are there any 1, 2, or 3 things that maybe stand out to you from the new release that you think is worth highlighting?
Yes, especially about our test mining product that we freshly introduced to our customers. I'm very excited. This product was more than 2 years into the making, and we spent a lot of cycles with our customers to make it really well and to be able to address real use cases. We were actually about to ship it a year ago, but we decided to pull it and make sure that it really works. This is a very difficult type of product. Imagine, basically, it's like you are watching some users, above their shoulders, working on their computers and figuring out what they are doing.
Yep.
So it was for us, really the best combination of computer vision and machine learning. It was the most difficult AI project ever attempted. And of course, it really, if it works, it really accelerates the funnel of opportunities for automation. But I want to give you another pointer. This project also led us to understand even better our space. We are more and more calling what we are doing semantic automation. I want to explain to you a bit this theme. It's going to become a major theme across all our platform line. So in the user interface and in the documents, there is a trove of semantic information that was largely untapped by the big data movement. More often than not, in the databases, you will see that the data, the business data, is not really captured alongside with the metadata, with the semantic information. If you look at the table structure in SAP, you would, as a human user, you would not understand anything. So you need people that pull it out and augment it with semantic data. But in the user interface, this semantic data exists, is there, because user interfaces are built with meaning. So people use their meaning. Now, imagine us harvesting this semantic data and use it in automation. So we'll make automation even closer to humans. Instead of describing in very little detail, you should take, like customer name and put it into this box, first name, put it into this box. You just say, extract semantic data from invoice and dump it into this form. And we figure out, like a human user, all the connections instantly. And even moreover, putting it into our cloud analytics platform, with this semantic information will give tremendous view on the processes and data. And as actually Ashim pointed to me, it was really one of the first themes that we talked in, like our first forward in 2018 in New York. And now we are seeing it coming a bit to fruition.
No, well, it's a really interesting sort of topic because it seems like it's a virtuous cycle. So if you understand your tasks better, then you can help automate them better. If you understand the data better, you can help automate the task better. You can make people more productive. So it only, I would imagine, adds fuel to the ROI discussion so that after, you get that initial ROI bout, you're going to have, it should be a really long tail of opportunity for, frankly, the customer. So it's an interesting, it's a really interesting thought to consider. How early do you think, is this something that you have early stage customers testing out yet? Or is this going to be something that sort of, builds throughout the year? And this is something that's going to play out from a customer adoption perspective, maybe in the later part of this year, but maybe more so in 2022?
We have laid out the foundation. Our work in document understanding, in test mining, really is the foundational work that we are building upon it. We estimate that in a couple of years, we will be able to bring more and more of these concepts into production. And again, it's not a feature. To us, it's a major theme. This is where our thinking is, building this semantic automation platform.
It's a fascinating, that's going to be a big theme, I think, to watch. We did have one question, and maybe I'll broaden out the question a little bit, which is, how do you all work or think about sort of existing systems of engagement, whether it's ITSM or ticketing platforms, CRM systems? I'll throw those out there. Those are, do you think those are things that you could replace some of the functionality of at some point in time, or do you see those as technologies or platforms that you can help enrich, or make the processes around those platforms more efficient? I think the question is just sort of about, can you expand into those sort of traditional systems of engagement, or is that an area where you're going to partner with people and help, frankly, make the processes around those systems better?
We believe that automation is actually a new layer in the software stack, enterprise software stack, that sits on the top of the application layer. Like application layer sits on the top of database layer, and database is on the top of the infrastructure layer. Our automation will sit on the top, and definitely we will enrich the applications. But in the end, people are using applications in order to automate some tasks.
Yep.
And to view some information. There is no point into having manual tasks on the point of applications. So we believe that people will connect throughout this layer to the application themselves. And they are using applications like they use the database. Applications provide a lot of structure input about, the major processes are built in, and so in no way we are going to replace them. But we add this flavor of automation on the top of that.
And that's why when you look at our ecosystem, we have partners like Alteryx. We have ServiceNow. We have partnerships across. We have incredible partnerships across that ecosystem of applications because of the symbiosis that is there. What I do also would add is our platform now can be used to make the next generation of applications for processes that are typically done in a homegrown, disparate way that clutter up a lot of the industries. Now that is also the next generation of processes and applications can also be built on UiPath. And that is equally exciting, both the symbiosis as well as the opportunity that we have.
Okay. We have about 5 minutes left, so I'm going to try jam 2 in real quickly. Maybe first for Ashim, for you, this is a huge opportunity in front of you all. We're sort of scratching the surface in terms of automation at the enterprise layer or level. Where are your investments going to be over the next year? How are you thinking about that? And I would say maybe Q, add a flavor of sort of geographic investments too, because this is obviously a global opportunity, not just something that's going to be in the U.S. This is global. So how are you thinking about sort of broadening your international reach?
Yeah, so listen, we view the market, the $60 billion plus TAM, as frankly continuing to be understated. Every single industry, department, employee, and process, we actually can serve. We look at our investment first and foremost in R&D, building out our platform. We are essentially a group of one, an automation platform that has discovery, analytics, capabilities to build, manage, and run automation. And that is very powerful. So continuing to build that out and to have the right integration between all elements of the platform and continue to expand. That is going to be a primary area of investment. From a go-to-market side, I would say we were born global. So we are fortunate to have an infrastructure established in Japan, established in APAC, established in EMEA, and established in all across the Americas. So when you think about our go-to-market investments that we're going to be looking at, we really can say we're going to invest to make sure that we're helping our customers and partners scale so that penetration and the true benefits of automation can be realized across every single industry. And of course, we're going to hire because the demand is so high, our pipeline is so rich. We will continue to, both while driving productivity, make sure we have enough feet on the street and be local with our customers to serve them and to show them the value of automation as they're both beginning as well as joining into their journey. So I would say broadly, Americas, EMEA, and APAC are all going to be investment areas for us. Okay,
that's helpful. Maybe Daniel, just in the last couple minutes, this idea of semantic automation, it seems like something that's just now taking off. I guess what are you doing, in your role to try to, spread the vision? Do you feel like you're getting in to talk to more CEOs and thought leaders? And is that resonating with them at this point in time? And I guess how are you thinking about maybe trying to make this an even more well understood opportunity for every company to automate, a lot of the manual business processes that they're undertaking right now?
We are just starting to socialize this idea. We first introduced it to our dev conference and shortly on our investor earning calls and talking to investors today, talking to you and your audience today. The early reaction is very positive. I think it makes sense. It clicks. And it brings people to realize the power of our approach. I want to remind you, we've been through the typical stages of technology adoption. First of all, it's derided, and then it's ignored, and then fought against, and then largely adopted.
Yep. That's great. Well, I know you're going to have a lot more to talk about this October at your user conference, and I'm looking forward to getting on a plane and joining you there, hopefully, in Vegas. And I'm sure some other investors will be there as well. So
we'd love to have you there.
It'll be nice to us here. It'll be nice to do it in person. So with that, we'll end a minute or two early. Daniel, Ashim, thank you again. Congratulations on the quarter, and thanks everyone for joining us. And if there's any